So the story that they put up, why are banks failing and does that herald another financial crisis? Three BU experts on banking, law, and financing answer three questions about Silicon Valley Signature Bank and what happens next. Okay, so first of all, and I've said this in like the last couple of videos that I did where I was like, poking at the Federal Reserve. First of all, the reason why ultimately we're facing a financial catastrophe is very simply because America is almost $32 trillion in debt and the Federal Reserve raised interest rates. If you rewind just a year ago, what is today? March 2023, right? If you go back just a year ago, slightly that's about the same time that Russia decided to invade Ukraine. Interest rates, if you go back to the beginning of last year, interest rates were still, you could get a 3% on your mortgage. You could get, first of all, the prices of the houses had actually gone up. The housing values had gone up post-pandemic because people were trying to buy houses as quickly as they could. But the thing about it is the interest rates on a 30-year fixed were still about a 3%, and in some cases slightly lower than a 3%. When the Federal Reserve started raising interest rates because they claimed that they were going to fight inflation, which, mind you, you can't fight inflation unless you raise the interest rates to meet the inflation rate. So if the inflation rate is 10, you have to raise interest rates to 10, which is something they couldn't do without absolutely crashing the economy. They started raising interest rates, and then what you saw was all of that cheap credit, that cheap money, those cheap credit cards, all that cheap borrowing, all that welfare that they were printing, all those welfare checks they could print. What you saw all of a sudden was all that cheap money became not so cheap no more. So cryptocurrency market, all those people borrowing all that crypto money, Sam Bankman-Fried this and Mashinsky that, all these people borrowing on margin, people taking out mortgages to buy Bitcoin, all that bull. Well, guess what? All of a sudden it became not so cheap no more. See, it's easy for you to use somebody else's money. It's not so easy when all of a sudden now it's costing you, especially if you've got to pay crazy premiums. So basically, this, no matter how they try to twist this, no matter how they try to change it, the simple fact is Federal Reserve raised interest rates. Now, they couldn't raise interest rates too high because if they did, then the national debt would become unserviceable, which would cause America to default on its debt. So they only will raise it as much as they can afford to pay on the national debt, or at least the interest on the national debt. So ultimately, Federal Reserve raised interest rates, and it's going to keep coming back to that. That's the bottom line. Federal Reserve raised interest rates. Federal Reserve raised interest rates. Interbank lending now costs more money. Not only that, bonds. The prices on these bonds is also very important because a lot of people found themselves underwater on their bonds. Well, let's read into the story just a second. Okay, it says reacting to the collapse of Silicon Valley Bank late last week, the second largest bank failure in U.S. history. President Biden on Monday vowed to do whatever is needed. Oh, shit. To forestall more runs. Americans can rest assured that our banking system is safe. Your deposits are safe. Come on, man. Come on, man. But we beat the banks. Wasn't that what he said? He said, we beat the banks. You can't see my hand shaking, but yeah. Isn't that what Biden came out and he said? That's what he said. He said, we beat the banks, didn't he? Come on, man. Come on, man. You can't charge people that much. What a bunch of malarkey. Wasn't that what he... Anyway, how can he be sure? SVB collapsed after many of its startup depositors made a run on the bank amid a venture capital crunch in the tech sector. Now, first of all, this whole thing about a run on the bank. When I was working in banking and I saw what happened to this bank, you probably don't remember it, IndyMac. I don't know how far back your memories go, but the FDIC used to only insure you up to $100,000. IndyMac, when I saw people lined up trying to get their money out of IndyMac, shortly after that, that's when the FDIC increased the deposit insurance up to $250,000. The problem, however, with increasing the deposit insurance up to $250,000 is that the smaller banks may have issues insuring people for that much or insuring individual depositors for up to that much. Now, the larger banks, they may not have a problem, but the smaller banks do, especially when you're dealing with a system of fractional reserve where the banks don't have to actually keep 100% of the money in the bank. Like there are some banks that don't do fractional reserve and they have 100% of your money just in case, you try to cash out. So they're not worried about a run on the bank, but, they could pay just in case there ever was one. And it says the double whammy spoke to double whammy. It says then on Sunday, New York Signature Bank also closed after a run touched off in part by panic over Silicon Valley shuttering. The double whammy spooked observers about a possible contagion spreading to other banks and causing a financial crisis. But government regulators promised that depositors at both failed banks would be covered for their losses, overriding federal deposit insurance normal cap of covering deposits up to $250,000. So if you're the type of person and you've only got a couple of $1,000s in the bank, chances are you're in no danger and you don't really have to worry. The problem comes when you're a person who's like a multimillionaire and you're worried about, having a lot of money in the bank. Or let's say that you're a business and you're trying to cover your payroll, because some of these businesses may have multi-million-dollar payrolls and they've got money in these banks. Those are the ones that end up starting to worry. And the regular little guy, because some of you people, you've got like a couple $100 in the checking account. Like, let's not front. Like sometimes when I go to ATM in the store and some people leave their receipts behind, sometimes I look at these receipts and I say, oh yeah, this person took out $50. They only got like $300 in the bank. Those are the people who really don't have to worry. You're dealing with such a small number, you don't really have to worry. But we're talking about multi-million dollars. We're talking about hundreds of thousands of dollars. Those are people who are worried. So some politicians warn against taxpayer bailout of banks that may have acted rashly, and Adam Gurin, associate professor of economics at Boston's University College of Arts and Sciences, says once the crisis is dealt with, analyzing what happened and why will be critical. Yeah. Right now, we're in the fire phase. We need to put the fire out. Then we need to do the postmortem on what went wrong and how do we change our fire code. Well, guess what? The first thing you should do to change your fire code is not be $32 trillion in debt. And when I say 32 trillion, we're basically 31 trillion headed to 32 trillion. But we'll get there soon. Don't you worry. Let's see. Gurin. Oh my God, somebody's got one of these shitty ass Honda Civics or something out there. You could hear it revving. It's sad. I hate these little ass 4-cylinders. It's just terrible. So anyway, not that worried, but we always have to be aware of downside risk. It seems like the government is taking that very seriously. I think it's possible that other particularly small and regional banks fail. So, all right, I'm just going to say it like this because I don't feel like reading all this. I don't really have to. When I was looking online to see if there were any other lists of banks that were in danger of failing. The reality is, chances are they don't want no list like that to actually exist. And if somebody does make a list like that, they're going to erase it quietly and silently. They're going to shadow ban it. If there is such a list on the internet, you can bet that there'll be people who have done a little bit of research in 5 minutes. They'll see that list, and then the next thing you know, they'll be at their bank getting to ready to pull their money out. They're going to make a run on the bank. You have to understand the government in no way wants there to be runs on these banks. That's what the bailout all in 2008, 2009, when Obama took office. That's what the bailout was really about. They wanted to make sure that nobody could make runs on the bank. So what they did was they put enough money out from the government itself to all of the banks in order to force them to take that money, so that this way all of the banks who took money, all of them now appeared to be not only solvent, but they also all appeared to be strong. So the small banks that took money appeared to be just as strong as the big banks that took money. So this way, nobody would say, uh-oh, that bank right there didn't take money, so that means they must be strong. Or the government didn't want to give them money. And then, either the person would say, yeah, I'm going to put my money in that bank, or I'm going to take my money out of that bank. So ultimately, what the government did was they pulled the wool over our eyes. That's what they did. They wanted to make sure that none of us could ever figure out which bank was strong, which bank was weak, and, whether or not we should pull our money out. Now, my reality is, well, who do I do banking with? I do most of my banking, I will say, on a day-to-day basis. I do my banking with Capital One. Long-term savings, I'm in a credit union. And for the most part, they're not into all of these crazy ninja loans. They're not into all of this bond lending. They're not into all of this stuff that could put you into serious risk. So for the most part, I'm not worried about long-term savings in credit union. And I'm not worried about day-to-day banking with Capital One. As far as real estate holdings go, I'm pretty much down with Wells Fargo. Some of you may know. If Wells Fargo says, oh shit, we're going out of business tomorrow, if that were to happen, I'm not saying it is. I'm just saying if that were to happen, all that would happen is any real estate loans that I had with Wells Fargo would simply be repackaged and sold to somebody else, possibly JP Morgan Chase, possibly anybody else, not Capital One, because Capital One doesn't do mortgages. So the reality is I'm not worried. Now, some of these people out there who deal with these small banks, like some of these banks you ain't never heard of, and I'm not going to mention any names because the last thing I want is YouTube trying to say that I'm trying to start a run on the bank or some shit. So I'm not going to mention any fucking names. But the bottom line is a lot of these small banks, some of these banks are in danger. How bad are they in danger? Well, I have no idea. But one thing's for sure. What put this into effect was the raising of these interest rates. We kept interest rates far too low for far too long, which enticed people to do risky borrowing and risky lending. Now that they started raising rates, now the average person can't easily get the loan that they want at the interest rate they want. And most people are just giving up on buying certain things because they know that if they pay, first of all, let's say if you want to get a car loan, you're talking about a 7% interest instead of a 3%. Yeah, well, that could add hundreds of dollars a month to somebody's payment on something. You're talking about a home loan, and you're talking about a 30-year fix, and you're talking about like 6.25 or 7%. Yeah, well, that adds hundreds upon hundreds of dollars onto these payments in some cases, and many, many, many thousands of dollars when you look at the length of the loan, when you look at the amortization of the loan. So the reality is, right now, this economy is in a rut. So all I can really say is what I plan on doing. Because, see, I have no idea who's going to fail next. Because, if you really think about it, these things have been basically going down one by one. And it's usually, these were large banks. But I would say that the best thing you can basically do, especially if you're the type of person who's in the market for more real estate, if you're looking to buy real estate, you need to just save up cash. You need to save up as much cash as possible and just wait. Now, I personally don't think there's going to be a housing crash. A housing crash and a bank crash, two different things. I don't think there's going to be a housing crash. Interest rates are high. Housing costs are high. Anybody who bought their house within the last 3 years and got an interest rate at a 3% fixed for 20, 15, or 30 years, anybody who bought that, they're not selling. They're going to hold that because what they have, and they know what they have under their belt an asset. They're not selling that. They're going to hold that. They're going to hold that indefinitely. I don't believe there's going to be a housing crash at all. I just don't believe it. Now, they could pull some shit and they could say, hey, guess what, big truck, you were wrong. We got a housing crash for you. I don't think that's going to happen. Bottom line is save your cash. If you have cash and there is a housing crisis, you might be able to buy in cheap. Now, if we did have a major crash of housing, what would end up happening is the Federal Reserve would quickly be forced probably to lower interest rates, which is why I just don't think that's going to happen. If there was a housing crash, it's very possible the Federal Reserve would be stubborn and not lower interest rates because they're so determined to fight inflation. You just don't know, so all you can really do is just save cash. There's no way of knowing what's going to happen next. There's just no way of knowing. If you think about 1 week ago, nobody knew that this bank was going to go. Nobody knew SVB was going to go under, except the people who knew and possibly Jim Cramer, who is telling people, I don't think this is great. Yeah, you should buy it. It's a damn shame that this guy gets to keep his job despite the fact he's giving shit advice. I just find that amazing. I'm going to talk about him in a minute. So the thing about it is, if you're looking to buy real estate, if you're looking to buy a house, if you're looking to buy an investment property, all I can say is save your cash. Just save your cash, keep saving your cash, and pray. Now, there's no telling what's going to happen. But as long as you have cash, you have a ability to buy. Problem is, interest rates are still high. So it's going to take a lot to get the Federal Reserve to back off of these interest rates. The political pressure that, people like Elizabeth Warren, they're trying to put on the Federal Reserve, none of that's working. Federal Reserve is determined to keep these interest rates at a point where they claim they're fighting inflation. Inflation is winning. And the reason why is because the inflation rate is higher than the interest rate that the Fed raised it to. So they're not really fighting inflation right now. They're trying to fight inflation, but they're not. It's kind of like if there's a massive raging fire and you pull out your super soaker and just shoot the super soaker at it instead of, getting the Federal Reserve to pull out the fire truck and spraying the fire with the fire truck. Yeah, well, you're just shooting it with water guns. You're shooting it with, that's the best analogy I can come up with. It's like you're shooting it with water guns. What you need is one of those airplanes that flies real low and it dips into the lake and sucks up water. And then it flies over the fire and it drops tons and tons and tons of water on the fire. That's what you really need. But that's not going to happen. Sorry. So that's just where we are. That's what that's the way I see it. And again, I was looking for lists of banks that were in danger of failing, but I didn't find any. There's a bunch of websites that claim that they know who's next, but obviously nobody really knows who's next. In fact, no bank even wants to be on a list like that, because if they even possibly end up on a list like that, they're going to get ran on. Nobody wants anybody to run on their bank. But that's just what it is. That's just what it is. Now, as I mentioned, my bank, Investors Bancorp, they got bought by Citizen, and even part of HSBC got bought up by Citizen. I've already decided I'm not staying with Citizen. I don't really want Citizen. I don't like Citizen. So, I'm moving my money eventually from Citizen to probably to Capital One. I just don't see that. I liked when it was Investors Bancorp. I don't like when it's Citizens. So that's just it. I don't like them. I'm leaving. That's just how I feel about it. So that's all. That's basically all I got to say there. Now, I find it really interesting. If you were to go to New York Post and you were to look up the story, CNBC's Jim Cramer urged viewers to buy Silicon Valley Bank stock last month. All of a sudden, what do you see right there? Look at that. This video file cannot be played. Erica, yeah, I'll bet it can't. And if you try refreshing it, yeah, you know damn well they don't want you watching that shit. So what did they do? They did everything they could to make that shit not work, right? Let's see if it'll work now. Let's see. They do everything they can to keep the real news off the news. See, that's the real news. Now, this is the same guy. Oh, there's nothing wrong with Bear Stearns. If you want to go buy Bear Stearns, I'd blah, 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 blah. It's like, how the fuck do these people keep their job? Look at this. Look at this. This shit don't even work. Look at this. Look at this. I'm trying to play this shit. Nothing. Doesn't even work. Look at that. Nothing. Right? Look at that. Look, they make damn sure that shit don't work. Make damn sure. Oh, okay, wait. Is it? Okay, here we go. Let's see. What's this? All I want to see is the part where Jim Cramer says something about buy SVB. That's all I want to see. Now, what did they do? Look what they did. FDIC takes over. So what they did, I want you to see this very carefully. This is what they did. They made it so that the clip of Jim Cramer urging you to buy Silicon Valley Bank stock is gone. Just understand that. So the clip can't play, but we're just gonna skip on to the part where they talk about the bank being taken over by the FDIC. Okay, and then it says right here, CNBC analyst Jim Cramer is once again being pilloried on social media after a clip resurfaced showing the Mad Money host recommending viewers buy shares of Silicon Valley Bank's parent company, which owns the tech-driven commercial lender. So if you followed this, you already know exactly, basically what this is about. So here's another one. I bet they took the clip off here too. CNBC's Jim Cramer touted Signature Bank stock a year before collapse, March 13, 2023. Let's see what comes up. Is it going to be Jim Cramer? I doubt it. Look at this shit. All of a sudden, I got high-tech computer equipment. All of a sudden, this shit can't do nothing. It's like, hey, where's the video you want to play? I can't find it. Yeah, yeah, right. Like we're stupid or something. We must, how does this guy still have a job? Look at this. This got nothing to do with Jim Cramer. Why don't they just show me the clip that I want to see of Jim Cramer? Huh? Exactly. Nothing. Meanwhile, what I had to do, since obviously they ain't going to show it to me right here, they got all these stories. Oh, it says, what is this? Okay, what is this? Jim Cramer says these 4 financial GARP stocks are something wrong. All right, let's see if it works right here. Let's see if it works. Let's see if that works. Watch this. Okay, I don't want to see Goldblum. I don't want to see Jeff Goldblum. All I want to see, come on, Jeff Goldblum. I don't want to see you. I don't want to see you. I didn't ask for an ad. Let's go. Here we go. All right, so I'm going to turn that down. Look at this. So obviously this is fair use, but all I want to see is him say something about SVB. That's all I want to see him say. And you know what I think they did? I think they pulled.
But if you're looking for growth at a reasonable price, you should look elsewhere. You might be better off focusing on
Yo, listen, I don't see anything about SV. Oh, wait. SBNY. That's not what we're talking about. Cramer said that instead of buying shares in banking giants like JP Morgan, investors should look toward under-the-radar financials. Okay, let me just keep on going. Okay, so they're not talking about, what is it? They're not talking about SVB, right? Wait, are they? Signature Bank stock. Okay, so that was Signature Bank stock. But I wanted to see this clip that Bet David played. Fair use. This is what I was looking for.
The Jim Cramer dead cat bat.
Look at this guy.
Here today is SVB Financial, don't you want?
You see this guy? You see this right here? Now, I just think it's so funny that there's a huge disclaimer that says that this is like entertainment use only and that I'm not really making stock advice and this, that, and other. Meanwhile, he's literally making stock advice because he's literally telling you what you should be picking. Now, I think it's funny if you look back at all my videos, because I have, unlike New York Post and unlike YouTube, who got rid of Jon Stewart. Jon Stewart had a really good breakdown of every single time Kramer was pushing something that was ultimately about to fail during the bailout. It was a really, really good breakdown because that guy, Jon Stewart on The Daily Show, he went after this dude. And it was back then. This was like 2008. And that's when I realized, I was like, yo, Jim Cramer's an idiot, right? Now, the thing about it is they pick and choose what they want to make disappear, as you can see. And they pick and choose what you get to see. But this he's been caught so many times. It was just like when he said, buy Bear Stearns. Is that video clip still here? Jim Cramer, where is it? Buy Bear Stearns. Yep, that you can't even erase. There it is. Bear Stearns is fine. Yep, Jon Stewart had this one.
Okay, Peter writes,
Yep.
Should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine.
Boom, 13 seconds in. Look at this. He's looking at the ground while he's saying this shit. How does this guy have a job? Please tell me that. How does this guy have a job? How does he have a job? I can't figure it out. So, I'm not going to waste too much time thinking about this because we already know what's happening here. We already know exactly what's happening here. I always think back to, I know this seems like it has nothing to do with it, but I always think back to Metal Gear Solid 2, The Patriots, right? I know you think this has nothing to do with it, but a long time ago, Hideo Kojima came up with this idea. And I ignored it. I'll be perfectly honest. I ignored it back then because I thought, I was like, you know what, this is just ridiculous. But Hideo Kojima came up with this idea in Metal Gear Solid 2 that we were going to have artificial intelligence working on the internet that was quietly erasing anything that the Patriots, they're the computer AI rulers in charge, right? So we were going to have an AI that was going to quietly erase anything it didn't want us to see. Now, you can't even go on Facebook or Instagram or YouTube or anything else without typing some shit and getting in trouble for it. So Facebook, if you type the wrong thing, automatically shit pops up, fact checks you, says you're lying, and then the shit fucking puts you in 30-day jail. You got YouTube. I've made comments. I don't even know what the comments were. And then they pop up on YouTube and say, hey, if you keep doing this, you're going to get a community strike. And then they don't even show you what the comment was, so you don't even know what it was. Not to mention video. See, the problem is when you got all this digital videos and stuff, right? They can erase shit and you'll never see it again. They can just erase it. It just disappears. And if they erase it over and over and over, like for instance, if something happens in the news and people upload the video, the computer automatically recognizes what that video is, and it can erase it as many times as it gets uploaded, and it can erase it instantaneously because they have that post-processing. And when they're processing it, they basically can tell. I mean, first of all, when I upload a video now, the computer in YouTube automatically reads the whole video and it puts closed captions automatically, and then it even bookmarks the video. Now, I don't know if those bookmarks can be edited, but the thing about it is Hideo Kojima, to his credit, warned us that this shit was coming. He warned us about this in Metal Gear Solid 2. Now, this was like 14 years ago, right? He warned us that this shit was coming. And then, once again, in Metal Gear Revengeance, he warned us about the memes, and he warned us about the, people like Senator Armstrong who were going to use war to end war or something like that. So chances are that's coming too. It's just coming a little bit later. But the thing about it is, it's like, if this stuff is on here and it just gets erased haphazardly and they just do what they feel like doing. In fact, let me just see if that video, Jon Stewart versus Kramer. Let's see if that's still here. Because I know this was when Jon Stewart brought Kramer on. Because what Jon Stewart did was Jon Stewart ran a compilation. And he did Jim Cramer so bad that Jim Cramer had no choice but to come on this show because he did a full compilation and he tore this dude up. And just by watching that compilation, you would think that he would have been fired, but it never happened. So Jim Cramer came on his show and, oh, well, it was like this and like that, blah, blah, blah. But there was a nice, easy compilation that Jon Stewart did on his show, and I have not seen it since. I had it on Real Player a long time ago, and boom, it just disappeared. And right now, everybody's arguing about what happened on January 6th. You got somebody saying, oh, well, how about you show the video where the cops let the people come in and the people breaking windows and this, that, and other. And it's like you can't believe anything these people say. It's all fake. It's just sad. It's just sad. It's just all fake news. It's all fake news. But that really wasn't what this video was about. This video was about TD Ameritrade moving to Charles Schwab. You think this has nothing to do with it? It really doesn't. But TD Ameritrade is moving to Charles Schwab. So my TD Ameritrade account, because see, for the longest, you've known that I had a YouTube account that I was showing off, and I also had Charles Schwab. But I had a Charles Schwab account that I was pretty much keeping private. I was only talking about the YouTube account because I was just showing people how to trade stocks and this, that, and other. Now, I'm not worried about TD Ameritrade moving to Charles Schwab because I've been through this before. My TD Ameritrade used to be Scottrade, and Scottrade apparently got bought by TD Ameritrade, and then Charles Schwab bought TD Ameritrade. So ultimately, over the years, they've been slowly working to move TD Ameritrade over. So it says there, since Charles Schwab acquired TD Ameritrade, we've been working together to build something special for clients. Now that it's nearing the point where two great firms become one, we want you to know what you can expect from your upcoming Schwab experience. Yeah, well, since I'm already with Schwab, I already pretty much know. But bottom line is, if you have a TD Ameritrade account, they're moving over to Charles Schwab, and it's basically automatic. It's you don't really have to do anything. Your account is simply going to get shifted over to Charles Schwab's website, and all you really have to do, my recommendation, is change your password. As soon as, if you have a TD Ameritrade that gets moved to Charles Schwab, the first thing you should do is make a new password. If you want to keep the same account number, that's up to you. Some people might want to change their account number, but I don't feel that that's really necessary because I have automatic alerts. So just in case anything happens in my account, I automatically get alerted, over the phone, text message. So I'm not really worried about it. But dividend paying stocks are probably your best way forward. Everything else is way too volatile. Everything else is just so volatile. And I showed you my dividend stock portfolio already. I'll show you again. It's no big deal. So let me just look down here because, for privacy purposes, I'll show you what it looks. I'll show you what the YouTube account dividend paying stock thing looks like. So let me see. Watch lists, dividend. Where's it? Positions and watch. Okay. So I'll show you what my list. I'll show you all my lists. All right. So these are the diesel fuel stocks. I don't know if you've noticed this, but fuel prices have been going up again. Now, they have not gone up as far as they did when Russia first invaded Ukraine roughly 1 year ago. Roughly 1 year ago, all of my oil stocks went to the moon. I mean, they went to the moon. But you remember, gas went to $6 a gallon. In some places, it was $7 and $8 a gallon. And in some parts of California, it was $10 a gallon. And we got the pictures. So the thing about it is diesel was always more expensive lately, or for the last couple of years, than premium unleaded. So these were just a couple of diesel stocks. And as you can see, the majority of them do pay a dividend. If I sort them for highest dividend yield, you'll see that it's $30 a share for CVI. KMI is 6.59. And by the way, you got to understand, for people who are not used to buying dividend paying stocks, you get paid per share. So what they're basically saying is for every $29 or $29.36 that you're putting in for each share, per each share, your yield is 6.94%. So it's per share. Because some people don't understand how this shit works, and they don't understand like how much they're going to get paid. The bottom line is, over time, when you do dividend paying stocks, you're trying to build up a portfolio, and ultimately for the companies that you like and for the companies that you love, you're trying to get as many shares as you can possibly get. Now, if the company's paying you a dividend, then that means for the most part that company is profitable, because a dividend is them taking their profits and sharing them with their investors. So I usually use dividends to help me judge which companies I want to buy stock in. Now, some people might say, oh, but you should look at the debts and the balances and this, that, and other. And I'm like, you know what? For right now, I'll just stick with the actual company and whether or not I like the company. Like my personal index, Mangoat, this is where it is. Microsoft, Nvidia. Well, if I say it in order, it's Microsoft, Apple, Amazon, Nvidia, Google. After G comes oil stocks, and then there's AMD, and then there's Amazon, and then there's Tesla. Now, post stock split, Amazon and Google have been down. Part of that is because China is still shut down. As China makes their way open again, so long as America doesn't go and start a war with China, I don't think that Apple, Amazon, and Google, I don't think they're going to be down that long. But as you know, this stock market right here is all fucked up because it's all geopolitical. They got problems going on with Russia. They got problems going on with China too. And it seems like this administration is like a bunch of neocons just trying to start fights and trouble with people. It's like everybody was getting along great when Trump was in office internationally. Trump was starting shit here, but everybody internationally was getting along just fine. And then all of a sudden Biden gets in there and these pathetic neocons and liberals get in there. All of a sudden everything goes crazy. And that's just what it is. So these shares do pay small percentage yields on their dividend. Not much, because right now tech is down. So this is my main dividend earning list. So as you can see, Sunoco, Verizon, AT&T, Ford, Citigroup, BP, Sanofi, Shell, Chevron, Gilead, Newmont, ExxonMobil, Valero. As you can notice, most of it is banks and oil. Don't be fooled. All of the banks are not in trouble. Some of the smaller banks are in trouble. Some of the smaller banks that were underwater on their loans, some of the smaller banks that did these ninja loans and stuff, they're in trouble. But for the most part, the bigger banks are just fine. Some people have been wondering about whether Wells Fargo's in danger. I'm not worried about Wells Fargo. And I actually did home loans with Wells Fargo. But the thing about it is, if one of those banks fails and you owe them money, all they're going to do is take your loans and send it to another bank, and you're just going to keep paying the other bank, if that's what happens. So I'm not really worried about them. As far as personal banking, where you keep your cash, your money is in the bank. It's FDIC insured up to $250,000. It used to be $100,000, but after the run on the bank, IndyMac, the Federal Deposit Insurance Corp, or FDIC, they changed it from $100,000 to $250,000. So for the most part, you don't really have to worry that much. Besides the dividend, and I have a lot of these, because with Charles Schwab's account, I have a lot of shares in dividends that I've built over a long period of time, because basically when I get my YouTube checks every single month, I typically buy stock every single month. So I've built up so many shares that, I'm right now I'm building up towards retirement. That's basically what it is. Let's see. This Reddit goes to Wall Street. This is not actually me. This was me tracking those Reddit things, because you remember how they kept on talking all this shit. Oh yeah, no, buy AMC, but AMC's going to the moon. We're going to Pluto. You remember that? That's AMC now. You remember those people who kept telling me, oh yeah, no, AMC's at $10 right now, but we're doing a short squeeze. I was like, excuse me. After you saw what happened with GameStop, they will never let that happen again. Oh no, you don't know what you're talking about. We going to the moon. Uh-huh. Yeah, AMC went to the moon. It went from 9 to 4. Right. How about GameStop? You remember all those people I had to argue with? You remember all those people I had to argue with online because they're so goddamn smart? You remember that? Oh yeah, GameStop at 300. We going to the moon. We going to Pluto. Yeah, uh-huh. Right. GameStop, $16.89. So unless you got into GameStop when it was like $2 or $3, I don't think you went to no moon. You remember those people with what was it? Airbnb? You remember all that? Airbnb used to be like 200 and something dollars, and Airbnb never turned a profit. And Airbnb's right now it's $116 a share. I've gotten to the point where I don't even bother arguing with people. Every time especially the people who be criticizing me when I talk down on Bitcoin, it's like I be like, yeah. Wake me when it gets back to 50,000. Wake me when El Salvador breaks even. Yeah. Those are my China stocks. I don't even now that the neocons are screwing everything up with China. I don't even look at this no more. Alibaba right now is where Alibaba was back in 2015 when me and my friend invested in Alibaba. We ran up to $300 a share. But my friend sold most of his because he got worried because he saw it go down from like we got in like $86. It went down. I've told this story so many times. It went down and he didn't like the fact it went down. He didn't like the fact that they said, oh, you owe us money because when you bought it, it went down. And sure enough, right after he sold, shit started going up. And then around COVID, Alibaba basically fell down. Once America put together that HCFAA Act, it's called Holding Foreign Companies Accountable Act. Once they did that, they basically killed China stock. But then China had that problem with Evergrande and their real estate market, because their real estate market has like a $50 trillion hole or something. So yeah, that didn't go too well. So the Chinese stocks, I don't even bother looking at these things right now. Someday they'll be back, but right now China's still messed up right now. So I'm not even going to talk about the tech stocks because the majority of those do not pay a dividend, but I'll show you the ones that do. The ones that I do hold that do pay a dividend, I'll show you those. Let me just resort it. Okay, yeah. So Lockheed Martin, the warmongers who make... Let me tell you something about Lockheed Martin. I've been thinking about them lately. Do you realize that they built the F-35 and that goddamn thing, they built it and they didn't even test it to make sure that the pilots could actually urinate while they're on the plane? Because what it is if you're a pilot and you're in a fighter jet, you have what's called a piddle pack, right? And the problem with a piddle pack is you have to unbutton yourself and everything in order to pull your pee-pee out so you can pee in the piddle pack, right? And it just so happens that some of these pilots have actually crashed while they're trying to use the piddle pack. They made the F-35, and the F-35 has an ejection seat that is so awkward to sit in until the pilots can't even use the goddamn urination pack. So what the pilots end up doing is they end up dehydrating themselves by not drinking water. But guess what? If you tactically dehydrate yourself, you end up in a situation where you can't pull as many G's, and if you do try to pull G's, you're going to black out. I can't believe Lockheed Martin gets away with this nonsense. They build these fighters. They look cute, but the damn things, you can't use them. Not only that, I think I don't know how long it's going to take them to figure this out. It's something I already figured out. It's like the mere fact that even if they wanted to give weapons to Ukraine, like fighter jets, and even if they wanted to give tanks to Ukraine, it would take so long to train to use them and to fight in them that it wouldn't even make a difference. And not only that, these fighters are $100 million or more per plane. So we're building stuff that is so expensive that nobody wants it. The Europeans do not want this stuff. Even with the threat of Russia out there, the Europeans don't want this stuff because they know that you're not buying a jet, you're buying a program. It's just like imagine you're on a college student salary. And somebody says, yeah, I'll sell you a Lamborghini. And you'll be like, oh, yeah, it sounds like a great idea at first. But then you're like, wait a minute, I can't afford that. Because what happens if it needs an oil change? I can't afford no $600 oil change. I can't afford no $500 tires. I can't afford $1,000 tires. I can't afford to buy new rims every couple thousand miles. It's like, it's a bad idea. But now it's worse than buying a Lamborghini. A Lamborghini is only about $300,000. Now you're talking about buying a Bugatti. You're talking about buying a $3 million car on a college student salary. That's basically what we're talking about. You can't even give this stuff to them because there's nothing they can do with it. It's just sad. Raytheon, all the warmongering corporations. Raytheon, who's this? General Dynamics, they make the F-16. Raytheon, they make the computers in the F-22. It's like all of them, they're doing decently. They're up. They're definitely up from their 52-week ago. They're up pretty decently, especially Lockheed Martin. But these guys right here, they pay the dividends. As you know, I got Microsoft and Apple. I also got GM. GM is low right now because they suck at delivering right now. Their deliveries suck. And I'm still waiting for my electric Cadillac. They said they're going to build it in April, and I probably see it during the summer. But last May is when I ordered the damn thing, and I was supposed to have it by now, but they haven't even built the damn things yet. So it'll come when it comes, and I'll be ready to buy it when I buy it. So this is GE. GE is down by like half from a year ago. Right now, all of these dividend-paying stocks that you see right now, you'll probably notice that with the exception of the warmongers, most of them are, for the most part, down. NVIDIA's down from where it was. GE's down. Apple's down. MU, who are they? MU is Micron. Micron. Yes, Micron is opening up a new factory in Troy, New York in order to build chips because of the Congress put together the CHIPS Act, and they're trying to build chips here because they're worried about whether or not China ever tries to take over Taiwan, and they don't want China to control the chip market. So Micron is actually worth investing in, especially if you want to buy American or if you want to invest in American chips. Micron's definitely worth buying. Microsoft obviously is Microsoft. If you have an Xbox or if you have Windows, which I'm using right now, Microsoft's Microsoft. NOC, who the hell are they? Who are they? Oh, Northrop Grumman. Yes, as you can see, these are all my warmonger stocks. Northrop Grumman, Raytheon, General Dynamics, Lockheed Martin. Northrop Grumman builds obviously fighter jets and stuff like that. So they're, those are my warmongers right there. So that's that. And these are the banks. These are the banks. So right now, I'm not Jim Cramer. I'm not going to suggest you buy any banks because knowing what would probably happen, that bank would collapse tomorrow. So I own Berkshire B shares. I didn't buy Berkshire A. Berkshire A went up to $544,000. In fact, I think it went higher than that 52 weeks ago. But right now, it's $393,000. So the only people Berkshire A worked out for were people who bought in the 90s. I bought Berkshire B. I'm going to hold my Berkshire B shares for a long time. I'd say the next 10 years. Once, I retire and I'm on that beach with the little young foreign wife serving me the buko juice, that's when I'll sell. And that's assuming I sell. I might not sell. I might pass it on to my child. I don't know. What else? Yeah, these are just the other banks. Some of them are up, some of them are down. JP Morgan Chase is 134. And they're down from 144 52 weeks ago. Most of the banks, Capital One is 96, down from 140. The real best time to buy the banks was when we had the 2020 coronavirus hit. That's when I bought, when I went wild. I was just buying banks and oil specifically. But as you can see, big oil, all of them, for the most part, pay a dividend. So you got Chevron, Valero, Exxon, Occidental, Shell, Sunoco, BP. Shell used to be Shell A and Shell B. They put it into one stock now. And I feel better about it since they put it into one stock. So yeah, Shell's pretty good. All of them are slightly down. Right now, I really don't recommend buying oil because right now, even though oil and gas prices are slightly up, The problem is it was really the Russia versus Ukraine conflict that caused them to skyrocket. Because if you remember the video that I made a long time ago, I Am an Oil Man, these things were rock bottom. I mean, it was in the negatives. It was rock bottom. My biggest winners were SM and what was it? SLCA. Those were my biggest winners. And right now, everybody's down, especially I sold. SM ran up to like $56. I bought SM at $2 a share. Less than $2 a share. I bought SLCA less than $2 a share. Those things ran up. SLCA has to do with hydrofracking, and they're called silica, but they had to do with hydrofracking. They went from like what was it, $2 a share, less than $2 a share. They went up to like $13 or $14. Where is it? In fact, SLCA is right now it's $11.71, but I bought in less than $2. If I had it to do all over again, knowing what I know, I would have put all my money in SM. All of my money, I would have put in SM. And when Russia blew up Ukraine, I would have sold right then. That would have been $56 I would have made per share. Like, I wish. But, hey, you know what? Hindsight's 20/20 vision. And what did Michael Douglas say? He said pigs get slaughtered, right? These were the lithium mining stocks. I told you about these a long time ago. And they're all up because obviously you've got to have this stuff in order to, make these electric cars. As you can see, ALB is a big winner for me, $225. It's down from where it was, $334, because right now the entire market is down because of the recession. So there's people not buying as much of the stuff as they would have. But it's definitely up from where I bought it. And that's all that really matters. As long as it's in the green, I could care less. I think that's it. So the last thing was airlines. As you know, I warned you about airlines. At first, I thought it was a good idea to buy them, but that was when they were at their low. Then they went up, and then they came right back down. COVID really messed things up. So it's like airlines, cruise lines. It's like right now, if you want them, they're low. But I have a problem recommending them. I'm not Jim Cramer. Jim Cramer recommends shit right before it collapses. So no, I'm not recommending anything. In fact, as a disclaimer, I'm just walking you through my portion of the portfolio. I am not giving financial advice. But what I am saying is stay away from Bitcoin. Get yourself dividend paying stock, whatever you may choose. But stay away from these goddamn cryptocurrencies. They're always pumping before the dump. They still haven't explained to you where the rest of the money is from 65,000 down to 24,000. They still haven't explained that to you. Tell them, before anybody try to get you to buy crypto, tell them to explain to you where the rest of everybody's money is who lost 60% of their value since it collapsed down from $65,000. Ask Nayib Bukele from El Salvador, where's the rest of his money? Ask Elon Musk all that money that he wasted in Bitcoin for Tesla. Ask him, where's the rest of the money? Ask him, where's the other 60%? That's what I need you to do.